What's going on, everyone? Gilman with Wellthy Stocks back with our daily Apple update video where we take a look at how Apple stock traded today, key levels of support and resistance that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me hit record and we will get right into it. So couple quick pieces of news. The markets overall are not looking too great, and that is related to rate increases fears. The Fed talked today, and they didn't really do much to calm kind of the inflation fears that a lot of people had. They did talk about, hey, we're not planning on raising interest rates anytime soon, but nothing was really done to. They tried to curb the fears of inflation, but nothing really came from that, so that wasn't good news. There's not really anything specific other than the antitrust with the Arizona app bill happening. Good news though is the iPhone demand drives Q1 growth for Apple supplier Foxconn, so that if Foxconn is doing well indirectly, right, that directly relates to Apple doing well because Foxconn is supplying Apple is going out and selling those phones. So that's good news. But as of the entire market, what I want to take a look at here real quick is what I talked about yesterday, right, with the S&P 500 and the ability or rather the chance that it goes down to visit that 55 EMA. And not only did we get that, we actually got a push down almost to the 89 EMA, right, going as low as 372 at some point, 371.88. So yesterday we were here, right, and I pointed to last week when we were in between these two lines, and the next day we went to visit the bottom line, this line right here, the 55 exponential moving average. So I said the same thing yesterday, right? I like looking at trends. Trends can be our friend. It can tell you where the market's going to go. And sure enough, we got that, but then it was a matter of, hey, do we stop there at this line like we did here, and when was the other time? I guess just those two times in recent times, or do we keep going like we did a couple times before? And clearly we kept going, and now we are in another weird spot, at least I think, because we are in between those two lines. We did push up nicely from the 89 EMA, but we're not above the 55 EMA, so our next level of support still comes in at that 89 EMA, which is about as much of a drop as we saw today, about another 1.25%. So that's what I'm looking at right now from just a market kind of commentary perspective. It's not very often that we see a drop to these lower EMAs, right? If you take a look here, we got one in September, we got one in November, late October, so that was kind of back to back. But really since then, we've been on a really nice run, so now we're pulling back. In terms of what the pullback could be, some people are saying 10%, some people are saying 5%, some people think the buying is already coming in. There's no real way to kind of predict that, and I can guarantee you that you can watch 10 different people, they'll all say 10 different things, and whoever is right is going to come out at the end and say, I told you so, right? But that doesn't mean they actually know what's going on. I think it's more of a lucky guess. I like looking at technicals one step at a time and see where that's taking me. If it's not this, then I wait, and then I look at the next, and then I look at the next, because I don't know when it's going to turn around. Look, I would like to know. I'd like to pretend like I know, but I don't. What I do know, like I said yesterday, is look, take a look at this here. Similar to last week, we're in between these two. Chances are we have downside here. Same thing today, guys. We're closer to the 55 and we had a nice recovery, but we got downside to the 89 EMA. Just wanted to point that out. And now we can get right back into Apple. One thing I do want to point out actually before we get there is if we take a look at the high of the NASDAQ that was set on February 16th, we have pulled back decently, right? We take a look at how much we've pulled back. We're at 12,723, 14,175. 10% of that is about 1,400 points, which puts us, kind of right where we are right now. So we've seen that 10% pullback in the NASDAQ. And NASDAQ is getting to be oversold as well. 34 RSI, 30 is considered oversold. Yesterday, I think I said overbought on accident on Apple. apologize for that. Same thing with Apple, right? All getting to that oversold level. So now let's take a look at how Apple stock traded. We'll talk about key levels of support and resistance, while understanding that the overall market sentiment right now looks weak until we see it kind of show me otherwise, right? So yesterday we ended here in the 122s, and then in the pre-market, right, we were hanging out around this lower 121 level. Again, pretty much textbook Apple right out of the gate. We push up one way, 123.60, kind of rejected by 123.69, off by 9 cents. We sold off, we broke below the 121.48 level, and then we hit it and then broke above it. Couldn't quite make it to the high here. Again, tried, couldn't make it. Broke below VWAP, broke below this level, tried to come up at 121.48, couldn't do it. So we dropped all the way, next level 119.09, dropped about 40 cents below that one, and then we pushed up, and then we kind of ended the day kind of flat. So not a great trading day for Apple, not a great trading day for the market. I mean, Apple is down $1.93, 1.58, which is not the worst performance we've seen compared to some of the indexes, right? If we take a look at NASDAQ, it's down 2.11%. Dow Jones was down 341 points, which is about 1.09%, and then the S&P was down 1.24. So, I mean, 1.24 S&P, 2% NASDAQ, Apple being right in the middle of those two. So not terrible for Apple, but obviously not a great trading day for the market as a whole. We are still staying above this bottom trend line that, you know, one of you guys pointed out to me and we drew on. So I guess that's some good news maybe. But let's take a look at future levels of support, future levels of resistance, and we'll see, you know, where we go from here. Future levels of support, you know, this line would be kind of the first one in the mid 119s tomorrow, you guys. If we keep dropping, then 119, and then we got the 116.99. We've had these levels for a while, right? The 119, 116.99. Did not think we'd be visiting these levels, if I'm being 100% honest with you. The last time we were at these levels was back here at late November. So we've given up December, January, February of gains. We were back where we were in November. Not great news, unfortunately, but that is what it is. So again, 119s, mid 119, low 119.09, and then 116.99, basically the 117 level is what I'm looking at on the downside. If we start to push up, I'm looking at, you know, this level right here, 121.48. And after that, I'm looking at 123.69, which was the high of today. Like we saw at the beginning of the day, right? We tried to make that push up, couldn't quite break through. So 121.48, 123.69 are the levels that I'm looking at on the upside. Similar to today, you know, maybe we make a push towards it, but we get rejected, right? That's why I like looking at those levels. Look, we are getting oversold, but markets are still looking weak. So I can't tell you, hey, Apple's oversold, stock up now. It's not how I do things, guys. I know other channels might tell you, buy Apple now, there's no way it goes lower. But they could have said the same thing last week, and we keep falling, okay? One thing I'll say is it's okay to not be participating in the market. You know, I know a lot of us get FOMO when stocks are going up. Look, Monday was a great day. We went all the way up to, you know, kind of the high 127s. And we are, you know, lower than where we were last week, where we ended the week last week, right? Our low point was for last week was 118.39, but we didn't stay there for too long, and today we're already lower, right? So it's okay to, you know, kind of stay on the sidelines. It's okay to take time to learn. This is probably the best time to do so. If you want to, you know, if there's a strategy you want to learn about, try it, write it down, be ready when the market actually picks back up. It's totally cool. If you're losing money, I am too. Most of my trades right now go out to May for options. I don't have any short-term option position. Closed those out like last week. So a couple expiring in May, but really most of my positions go to July and further. And then I have shares because, I mean, I could hold those forever, right? So I've got time for my options to turn around. I've got time on my shares because I'm not in a rush. This is also, you know, a good kind of warning to always make sure that you're not going on like super high margin and maxing it out. Because look, on the upside, yeah, you're making a lot of money, but when things go a little bit south, you're going to get margin calls, you're going to get maintenance calls. And if you can't cover them, you're going to have to close out positions for crazy losses. So always be sure for that. The reason I'm telling you guys all this is because I've been there, I've done that. I've, you know, made money and then lost more than I made, right? This week particular wiped out my gains for most of January, right? So my 2021 gains, if we see another red week, are, going to be wiped out. All unrealized, of course, because a lot of my positions right now, again, shares or long-term options contracts, but still, right? I'm just letting you guys know that, hey, if you're down, so am I. The market's down, so everyone's probably down unless you're playing puts. Just want to kind of share that, right? We all have our good days. We all have our bad days. This has not been a great week for me. Last week was not great for me. So it's totally cool. It's a part of the game. We'll have red days, we'll have green days. That's just how the market works. You can never time the market. At least I don't know anyone that can. If someone tells you they can, they're either God or they're lying, is what I've heard. So just keep that in mind. If you are losing money, totally cool. Been there, but take this time to learn. We'll bounce back stronger, you guys. Don't worry about it. As always, I'll keep you guys posted. Hopefully we see a reversal in the market right now. I'm not gonna say we have to, right? Because clearly we keep going down, but we are getting oversold. S&P does have a little bit more of a run room down, potentially. Hopefully we see a bounce off the 89 EMA if we do. And it is a Friday tomorrow, so usually we have a Friday fade, but with already how much we're down, maybe we see a small green day tomorrow, fingers crossed. As always, I'll keep you guys posted, but if you guys enjoyed this video, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, or the market, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.